Palantir stock has been experiencing notable downward pressure, marking the second consecutive day of losses as investors reacted negatively to recent developments. This decline followed an announcement from the Trump administration on Wednesday regarding a newly proposed strategic initiative aimed at reducing defense expenditures. Under this plan, the government intends to implement an 8% annual reduction in defense spending, which translates to approximately $290 billion in cuts per year. Given that a substantial portion of Palantir's revenue is derived from government contracts, particularly those tied to the Department of Defense, concerns have emerged among investors that the company may experience a decline in federal contract opportunities in the years ahead. These fears have led to an immediate reaction in the market, with the stock facing a sharp sell-off, as uncertainty looms over Palantir's future revenue streams. However, not everyone shares the market's negative sentiment. Wedbush analyst Daniel Ives, a well-known proponent of Palantir, believes that this reaction is an overblown response rooted in short-term fear rather than a clear-eyed assessment of the company's long-term trajectory. Ives, who has been bullish on Palantir stock since its dramatic rise from $12 to $120 over the past 18 months, sees the latest concerns as nothing more than an excuse for skeptics to push their negative narratives. According to Ives, those who have been bearish on Palantir since its initial surge are now using the newly announced defense spending cuts as their latest argument against the company's prospects. He pointed out that the news regarding budget reductions at the Department of Defense led to a pronounced decline in Palantir's stock price as investors reacted swiftly to the uncertainty surrounding future government contracts. Despite the immediate market response, Ives strongly believes that investors should take a step back and view the situation through a different lens. Rather than interpreting the budget reductions as a threat to Palantir's business, Ives argues that these changes could actually work in the company's favor. His perspective is that Palantir's advanced software solutions make it uniquely positioned to thrive in an environment where government agencies are expected to operate with greater efficiency and budgetary discipline. Ives asserts that the company's cutting-edge approach to artificial intelligence and data analytics will likely lead to an increased share of government information technology spending. As agencies and military branches seek to optimize their operations with fewer resources, Palantir software is expected to play an even more critical role in ensuring that key initiatives remain effective despite funding constraints. The shift toward a more scrutinized and disciplined approach to defense expenditures could in fact be a major tailwind for Palantir. The analyst believes that as military programs undergo increased evaluation, Palantir's leadership, spearheaded by CEO Alex Karp, will gain even more influence in government decision-making, allowing it to secure additional high-value contracts even in the face of broader budget cuts. Beyond the broader defense spending landscape, Ives also highlights the increasing investments in artificial intelligence under the Trump administration as a key driver of Palantir's future growth. One major initiative expected to boost Palantir's business is Project Stargate, a government-backed artificial intelligence program designed to expand the use of machine learning and predictive analytics across various federal agencies. As organizations within the US government accelerate their adoption of strategic artificial intelligence solutions, the company's expertise in integrating artificial intelligence into mission-critical operations makes it a natural partner for government entities looking to modernize their technological capabilities. Additionally, Palantir holds a significant advantage over many competitors due to its high-level authorization under the Federal Risk and Authorization Management Program. This designation allows Palantir to deploy its cloud-based solutions across multiple government agencies, including those handling highly classified and sensitive workloads. With this authorization in place, Palantir has the ability to expand its reach within the federal sector, providing essential technological solutions for a wide array of departments. As Palantir continues to gain momentum in both government and commercial markets, Ives remains steadfast in his conviction that the company represents a compelling long-term investment opportunity. He views the recent sell-off as another instance where short-term uncertainty has created an attractive entry point for investors looking to capitalize on Palantir's growth potential. Looking ahead, Ives maintains his belief that Palantir has the potential to achieve a market capitalization exceeding $1 trillion in the coming years. He sees the company evolving into one of the dominant players in the artificial intelligence revolution, drawing comparisons to industry titans such as Oracle and Salesforce. With artificial intelligence expected to play an increasingly integral role in both public and private sector operations, Palantir's ability to provide mission-critical software solutions places it at the forefront of this technological transformation. Summing up his stance, Ives dismissed the recent concerns surrounding defense budget cuts as mere noise when considering Palantir's long-term trajectory. He emphasized that the company's artificial intelligence-driven future remains incredibly promising, and he sees no fundamental reason to alter his bullish outlook. As a result, he has reiterated an outperform rating for the stock, which is equivalent to a buy recommendation. Furthermore, he has maintained a price target of $120, which suggests the potential for investors to achieve returns of 20% within the next 12 months. However, while Ives remains highly optimistic about Palantir's future, the broader Wall Street community holds a more measured perspective. Among the analysts covering the stock, 10 have assigned hold ratings, 5 have issued sell recommendations, and only 3 have given a buy rating. This mix of ratings has led to an overall consensus of hold for the stock. Additionally, based on the average price target of $91.88, Palantir's current share price appears to be approximately 14% overvalued. This suggests that while some analysts acknowledge the company's growth potential, others remain cautious about its valuation at current levels. For investors, this divergence in opinion underscores the complexity of assessing Palantir's long-term prospects. While some view the stock as an attractive buying opportunity following the recent decline, others believe that its valuation may already reflect much of its expected growth. Ultimately, the decision to invest in Palantir will depend on each investor's outlook on the company's ability to navigate changing government budgets and capitalize on the expanding artificial intelligence landscape. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.